Hello everyone, this is Vinay Bantu. I'm the president of Global Economist. Global Economist is an economic research and intelligence firm based out in Washington, D.C. And today here I'm going to talk about ESG and integrating social responsibility into ESG for an amazing event that's going to be hosted in London by MoneyNext on Banking Transformation Summit. So yeah, it's a very broad offering at this point. As I said, the financial institutions are banks, credit unions, even the neobanks at this point, and also some of the insurance companies. So the focus is how are they able to solve the global challenges of increased responsibility and governance in the social, racial, economical, and environmental justice. So that is the biggest global challenge that they are trying to incorporate in their products and services. The other thing is the opportunity in this space is primarily on the DEI, which is diversity, equity, and inclusion, and how they are going to advance those in their offerings as well, especially in terms of bringing diverse background executives, diverse background lines of businesses as well, and at the same time, how the ESG is considered into their day-to-day operations and the decision making in terms of impact and value that they're creating within the space. For that, there are focused initiatives that are, climate change, energy transition, AI and ethics, policy, regulatory and reporting, as well as the compliance, especially on the biodiversity as well as pollution prevention and circular economy. So these focused initiatives that they are trying to solve from a ESG standpoint, the primary indicator here is how do you maintain that social responsibility, the governance body in terms of within the organization, partnering organizations as well, and also the intermediaries that they work to generate profit or to create impact. So the institutions have been trying to align to a specific approach across the ecosystem, which is aligning their value system to the specific ESG principles, whether it is in terms of providing services, people, process, data, and technology. How do they manage the consumer data, and how are they able to even use that data to make decisions? So that is the key area here, is where their approach is changing on a day-to-day basis based on the data and the tech that they've been using in their relationships of doing business. Now, the other key changes that I have seen in the past few months is most of the institutions are going towards aligning to best business practices in terms of reporting, in terms of regulatory, in terms of even conduct of the advisors, as well as the banking representatives in this space, and also getting external certifications, which are certifications and memberships and associations to align towards these goals, such as Global Value Alliance, green-related engagements, as well as minority and community development. So these are the three major things, the challenges, the opportunities, and the initiatives and the approaches that have been used by different banks across the globe in order to encourage the social responsibility in their day-to-day operations. There is a socio-economic angle here in terms of socio-economic development for the underserved communities here. The first thing that comes is financial literacy. How are the banks and the financial institutions are building that awareness and empowerment in terms of the products and services? The other thing is how are they promoting even the minority owner, minority led within the enterprise as well as the community. So these are the key things the community development initiatives would be able to provide a certain application eligibility. It also provides a certain preferred rates, whether it's at banking or lending, and also providing certain disclosures, whether it is ESG or even the racial as well as the gender and the other components that go in getting them these benefits from the institution. So that is where I think the banks are trying to come up with a strategy on getting both regional as well as a national level impact movements, where they are creating these approaches based on their profit sharing going towards the impact and growth for the communities. It's a diverse sectors that we see, but the key thing is first understanding the consumer segmentation, the behavior, how we are processing the data and analytics, because from generation to generation based on age, demographics, that entire initiative changes, right? So how are we able to understand the needs of the customer? That's what it is. And how are we able to build that data and analytics to do some problem solving, especially, in private banks in terms of investment portfolio. How are you able to disclose and provide the wealth of knowledge in terms of economic and market shifts, even the sentiments and awareness of their portfolios on a day-to-day basis? That's where the news and the media, that's what the data wealth is being generated there. Now, the other part is the digital enablement tools as well as the resources for customers and advisors so that they build a relationship on a solid foundation. So those key elements, how you create that experience and the journey map within the processes and also outside the institution, in terms of relationship building, in terms of cross-sell on different products, having fair best practices, making sure that you have a competitive fee, you have a very good preferred rates for the customers as well in terms of depository accounts, receipts and disclosures. So sustainable finance is also changing this landscape in terms of ESG at this point, in providing those banking, lending, investment fair practices for those who are working toward that universal goal, as well as building bridges as the community grows in terms of economic and social development and awareness. Maintaining business transparency on reporting and benchmarks is the key main factor at this point for the banks and the financial institutions, especially in terms of how they leverage and utilize AI in terms of both data and automation. And that is where the diversity and equity and inclusion comes in, that how AI is helping in all those areas and what kind of assumptions and recommendations or even fears of the community are being processed in a manner to provide value. And ESG, so especially in terms of environmental impact, the social responsibility and the governance of the entire operations. So creating those benchmarks and maintaining the transparency and accountability is where they are trying to get those certifications, as I mentioned in your first question. Now, the other thing is most of the impact-driven organizations, they do a profit sharing, maybe a 1% of their profits to ESG or to the community development, giving back. And that community impact programs also help in expanding the scope of DEI into all areas of growth and development of the communities. And the other part is also in relationship, where the increased customer and employee disclosures in terms of marketing, sales, and service. So how do you manage all of that from a DEI perspective, not only in terms of internal strategies, but how to go for the outreach? So those are the key important areas. There are lack of indicators right now because most of the social impact is qualitative and less quantitative in terms of data itself. So there is a limited quantitative data on how the customer demographics change and how active and dynamic it becomes, is based on the lifestyle, based on your product offering. So there's a lot of adjustment that happens in terms of, understanding the overall value of the proposition itself. So the best way I would see is, the policy drives all of this, whatever the policy is, and the sector, and the market assessments in terms of how they maintain that continuity to define that social impact and drive that to delivery, right? So that is where building those continuity and transformation indicators help them understand ongoing changing opportunities within the community and within the organization to help those relationships. And also the challenge is how strategic you are and tactical you are in terms of building your impact and resilience of your business performance. So that's where doing gap analysis, both from quantitative, qualitative, strategic, and tactical, as well as short-term and long-term value offering, is how you define your social impact and the performance of it. So the key thing here is, leveraging industry experts, whether it's ESG experts as best practices experts in terms of the C-suite collaboration, right? So how the CEO and the chief operating officer, as well as the chief financial officer and strategy officer, all of them working towards innovation, compliance, and setting up these standards and metrics part of their execution programs is what is the biggest challenge in the market right now. So the first one is, how do they do effective risk management in terms of financial, operations, reputational, regulatory, and conduct risks? And how are they able to grow on this learning curve in terms of getting those certifications and being part of those association with those memberships and networks that would allow them to expand as well as build that identity and value impact within the organization as coming forward as a value-driven organization. It's a very broad question. As I said, the social responsibility starts with actually capturing the feedback between the institution, that continual feedback and the mechanism that you build over the years in terms of shared responsibilities among the partnering institutions as well as the intermediaries, customers, and employees. So that is where, the consistent survey and feedback mechanism would drive those innovative approaches to handle these major challenges. It could be a disruption or a continuity challenge or a space to transform the growth itself. So that is where innovative research and insights, we have to rely on data management as well as, a complete compliance and ethics in terms of regulatory reporting or ESG reporting, or even your financial reporting to an extent where we build optimization versus efficiency. How fast we are growing to build our profits or how fast we are growing to create impact. So there has to be some kind of normalization between those. And these innovative frameworks, especially in terms of banking and lending, the fair practices in terms of rates and fees, and also the corporate responsible actions, right? How are they able to manage those actions, and how are they incorporating that into their entire ecosystem of products and services, and as well as their platforms like digital platforms that would allow them to access the customer's identity, their social elements, and all of those psychology related behavior economic components and the data is where you build an ethical governance. And I think that is what all the institutions are trying to make sure that they have a proper AI and DEI and ESG disclosures to build that innovative path to value.